Today, I want us to talk about the pros and cons of having a high risk reward ratio and the pros and cons of having a low risk reward ratio. When it comes to this industry, one of the ways we get an edge in the market is based on what? The first one is what? Win rate, and the second one is risk to reward ratio. But today we basically focus on the risk to reward ratio. So when we say risk to reward ratio, what does it mean? The risk to reward ratio tells you about the risks you are putting in when you take the risks you are putting in when you take a trade, and the amount of reward you are expected to make when you win a trade. So I'll give a scenario. When you take a trade and you risk $10 per trade, your risk is $10. If you are looking to make a profit of $10, we say you have a risk reward of 1:1. You divide the risk by the reward, you get what? 1:1. 10 divided by 10 is 1:1. The same way you are willing to risk $10 and you're expected to make $20 when you win the trade, then you divide the $10 by 20. You see your risk to reward ratio is 1:2. So that's basically what we mean by risk to reward ratio. Yeah. So you can have different levels of risk to reward ratio. You can start from, you have a risk to reward ratio of 1:0.5 all the way up to 1:100, depending on the kind of strategy you trade. Let's define what a low risk reward ratio is. Based on my definition, I would say a strategy with a risk reward ratio less than 1:1 is a low risk reward ratio. So if your risk reward ratio is 0.5, 0.6, 0.9, I can consider it a low risk reward ratio. Then I would define a high risk reward ratio as anything above 1:1. So if your strategy has a risk reward ratio of 1:1.5, 1:1.6, 1:2, 1:3, 1:4, I might consider it as a high risk reward ratio. But the cut-off point is not really clear. At what level does it become a high risk reward ratio, and at what level does it become a low risk reward ratio? But based on my personal experiences, this is what I define the two. So let's look at the first one, which is the pro of having a low risk reward ratio. I've jotted it down in my notes, so I'll be making references in the notes. Kindly bear with me. The first pro I have is, with a low risk reward ratio, you have a high win rate. So that's one advantage that comes with low risk reward ratio. So like I've explained it, if you have a low risk reward ratio, that means your target is really close by and price is more likely to reach your target easier. So with that one, your win rate, as in the frequency you win the rate, is usually higher. If you take 10 trades, you are more likely to win 6 out of the 10, 7 out of the 10, 8 out of the 10. You get it? So you have a higher win rate. Second pro is less wait period. I'm not talking in reference to the time frame. This is general. If your target is really less, price is more likely to reach it at a quicker and easier rate. Price is more likely to hit your target easier compared to someone with high risk reward ratio. So the example I will use is, if I have a risk reward ratio of 1:0.5 and someone else have a risk reward ratio of 1:3, and you are trading on the same time frame, my trade will take lesser time to actualize compared to the one with what higher risk reward ratio. So that's what I mean by what less wait period. The third pro I'll talk about is improves your confidence. This is as a result of the fact that you have a higher frequency of wins. You are more likely to win more often. So it improves your what? Confidence, because we all want to see the wins. So with this strategy, you are more likely to see more wins on a regular basis. So that will automatically improve your what? Confidence. Okay. The last pro I'll talk about is short backtesting period. In case you are backtesting a strategy with a low risk reward ratio, one, it takes less time to what? Actualize. So it will ensure that what you collect sample size quicker for you to what? Use it for your analysis, backtesting analysis. So that's it. Now let's move on to some of the cons that comes with for trading with a low risk reward ratio. How to recover from drawdowns. Because actually your risk is higher than your what? Reward. It will take a longer trade. It will take more trades in order for you to what? Recover from your what? Drawdowns or from your losses. So let's say you have a $100 account and you raise $5 per trade and you're hoping to make $2.5. So that's a risk reward of 1:0.5. If you go through a losing streak or you have a drawdown, it means that it will take you more trades for you to get to what? Break even, because your profits are smaller compared to what? Your losses. Let's say you're in a drawdown of $20. That means you went through 4 losing streaks. Let's say went through 4 losing streaks, losing $5 on each trade. So you have a drawdown of $20 out of the $100. It will take you 8 winning trades or 8 winning streaks in order to recover from your what? Drawdown. That's what I mean by it's hard for you to recover from your what? Drawdown. Well, the second con about this one is wins are really smaller. Wins are really smaller. A risk reward of 0.5 will usually mean that your reward is half what you risk on. So if you are risking $100 on a particular trade, that means if you lose, you lose $100. But since your risk reward is 0.5, it means that if you win, you are going to win only $50. You get it? So wins are really small and the losses are usually bigger. That's one con. Another one is slow account growth. No brainer, obviously, because your wins are smaller, it is going to take longer. Your equity curve is going to be it will not be that parabolic, it's going to be that steady, slow linear rise. You get it? Just because your wins are small. You get it? And in these situations, one con is when it comes to your equity curve, you are more likely to have that kind of steep drawdowns, because when you are losing bigger, so the equity curve will go more steeper. When you are climbing, go slowly. I'll show you the charts. I'll show you the kind of charts. The charts on the screen. Yes, so that's it for the pros and cons of low risk reward ratio. Now let's talk about the pros of high risk reward ratio. And like I said earlier, I define high risk reward ratio as any strategy that has a risk reward ratio greater than 1:1. Risk reward ratio greater than 1:1. So the first pro I'll talk about is, so if you have a risk reward ratio of 1:1.5, 1:2, 1:3, 1:4, that can be considered as high risk reward ratio. So the first pro I'll talk about is big profits. Big profits. Usually your profits are bigger than your losses. If you have a risk reward ratio of 1:2, that means if you raise $100, you are more likely to make what? $200. So your profits are quite bigger compared to your losses. So you are able to make what? Big profits. And it goes on. The higher the risk reward, the bigger the profit. Have a risk reward of 1:5, and you are raising $100 per trade. That means your reward is going to be $500. So the higher the risk reward, the higher or the bigger the profit. Easy to recover from drawdown because the profits are really bigger compared to the losses. You just need few winning trades for you to get back to what break even, unlike the previous one, or unlike low risk reward ratio where you need lots of trades, lots of winning trades in order to recover. The next one I'll talk about, the next pro is fast account growth. Fast account growth. Your account usually grow faster. That's where you see the equity curve that's having that kind of parabolic kind of equity curve, or exponential kind of equity curve. That usually counts with a strategy with high risk reward ratio. So I'll show you an equity curve like that on the screen. Let's talk about the cons of having a high risk reward ratio. The first con is low win rate. Because your profit target is usually farther away from your entries, price is less likely going to hit your targets, less likely going to hit your target before it will reverse. The higher the risk reward ratio, the lower your win rate. So if your risk reward ratio is 1:2, you have a greater win rate compared to someone with a risk reward of 1:5 or 1:7. You get it? If your risk reward ratio is 1:1.5, you are more likely to have a higher win rate compared to someone with a risk reward of 1:3, 1:4. You get it? So that's what I mean by low win rates. Secondly, another con is longer wait period. Your profit target is usually not closer to your entry, so it will take longer for what your target to be reached. It is usually going to take a lot of candles for your target to be reached. I'm not making references to time frame here. So what that means is, if I have a strategy with high risk reward ratio and my friend has a strategy with low risk reward ratio, and we all trade on the 4-hour time frame, I'm going to wait longer compared to my friend. You get it? Although we all trade on the same time frame, but just that it will take longer for my target to be reached. And this is because my target is farther away. You get it? So let's say I have my risk reward ratio is 1:2. My friend's risk reward ratio is 1:1. You get it? So his target is closer, so price will reach it before it will get to my point. So I'll have to wait longer for the target to reach. Okay, that's what I mean. Then the third con will be longer backtesting period, and this is purely due to the wait period. Wait period. It will take longer for me to collect the sample size I need for the prime backtesting. So that's it, guys. So that's the pros and cons of having a high risk reward ratio and having a low risk reward ratio. We don't have a perfect risk reward ratio. Each strategy comes with its own risk reward ratio that will ensure that the strategy is profitable. If you are trading, you have a kind of strategy that is meant for a ranging market, it's better you go with low risk reward ratio, because a ranging market is more likely to reverse at any time. So the lower, the more profitable it will be. You have a strategy that is for trend following, or that's trend following strategy, then you can go for what? Higher risk reward ratio. Do you get it? So depending on your strategy, that will determine what kind of risk reward to go for in order to be profitable. And I've given you an example. A strategy meant for a ranging market, you are more likely to be profitable with a low risk reward ratio, and a strategy meant for a trending market, you are more likely to be profitable with what? A very high risk reward ratio. So know your strategy and know which one is suitable. Thank you very much. I hope you gained some value from this video. In case you did, kindly consider subscribing. It helped the channel, and also like the video to help with the algorithm, so that more people will be able to see it, so that they can also gain a value or two from this video. Thank you very much. Peace out.